Hi everyone, and welcome to Tuesday. I hope you all had a great weekend. It was certainly stunning weather-wise here in New Plymouth. So hey, I'll just share my screen and we'll go on and we'll have a look at the New Zealand Stock Exchange. Right, we should have it here. So basically, as you can see, we've continued our downtrend for the week. So this is week ending Friday last week. So what was that? That was about the 20th. So we've had a small loss. It's come off about 16.25% for the week, which is certainly smaller than the last week, that's for sure. Still got a fair amount of volume happening. So it still indicates that there is perhaps more selling pressure in that out there. The big thing that I always look at, and I've talked to this quite a bit, is these moving averages. So I've got the 30-day moving average on there and also the 15. And we can see here that back on the 21st, give or take, of August, they crossed. So in other words, the faster moving average, the 15-day one, or the 15-week one in this case, has moved through the 30-week moving average. So for me, when the shares are trading below this moving average, it's not an area that I want to actually buy into. I don't want to invest into any new positions or anything like that. In fact, I don't really have any positions at all open in the New Zealand Stock Exchange, and it's just for this reason. It's because when the shares, or when the overall market is trading below these moving averages, it means that it can be very, very hard for shares to gain traction. That's not to say that there isn't one or two that are outperforming, because there is. And if you do follow my share and review on a Thursday, you'll see that I have every now and again come across one. But at this stage, it means I don't want to open any new positions. Now, what I do want to have a look at, I'm going to pop in a New Zealand fund. It's FNZ. And this is an actual way that you can buy into the NZSX 50. It's through Smart Shares, and so it's the top 50 companies, and it basically has roughly an equal weight onto each share. And this here, or exposure, so 5% exposure into each share. And in fact, you can actually see for the last 2 years, we've pretty much been in a solid downtrend. So this is confirming what we're seeing just on the main board as well. We're below these moving averages. It actually crossed probably about a week earlier. It closed on the week ending the 13th of August is when they crossed through. So the 15-week moving average crossed through the 30-week. And again, it's been trending down. And in fact, you can see here that since the middle of July, we've only actually had 1 week where the market has traded in the Smart Shares here, has actually closed above the opening for the week. So that to me is still quite a negative sign. So I'm going to stop sharing. So not a lot to report really, other than that there's still a lot of volatility out there. There's still a lot of caution. And so basically, in my view, and it's certainly not personalised advice, it's just education only, enter with caution if that's what you're going to do into the New Zealand share market. Like I said, I'm not opening any new positions. I'm just holding. I've got a couple. I've got my stops in place so that if something happens, I will automatically get kicked out. And yeah, we've just got to wait it out. Because markets will change. And in fact, I remember a chief financial officer saying once, and I really value this, he said, the markets can remain irrational longer than you can remain liquid. So that's why it's very, very important to protect your capital. So come back on Thursday and we'll take a look at a share and review. Have a great day.